Thanks for joining the weekly recap of the Forex market. As always, of course, we have these four currency pairs in view: the euro dollar, pound USD, dollar yen, and AUDUSD. First, be aware though that this video is shown to a global audience, may not be suitable for everyone. Take a look at admiralmarketsglobal.com, select your country of residence, and contact the appropriate entity for more details. Also, please be aware that trading for exchange and global financial markets is considered high risk, may not be suitable for everyone. Please seek the advice of an independent financial advisor for more information on that. This video is for informational and educational purposes only. And by continuing watching this video, you agree with this disclaimer and you are aware of the risk involved when trading. Let's start this video with looking at the pound USD 4-hour chart. Last week, of course, we were talking about the triangle that was occurring at the bottom of this channel. Since then, we had indeed the bullish break that I was talking about last week go up to the resistance fibs, and that all worked out pretty well. We had a bullish break momentum and also the reversal occurring at the fibs and a down move. So that pretty much worked out as analyzed last week. What about this week? At this moment, you can see that price is still in that channel we talked about last week, about halfway, and there's a bit of a triangle going on. We got support level right in here indicated by the green line, but we also have resistance, of course, still connecting these tops. So we got lower highs, but we also have higher lows. So definitely a contracting kind of triangle chart formation pattern occurring at this moment. So a break of that support line could indicate the breakout scenario to the downside. And if price somehow manages, I don't expect it. I think this is the primary focus for myself. But if it gets above this resistance somehow, then of course there could be a bigger breakout to the upside. There's still a heavy level of resistance though up in here that could still turn price back down, even though perhaps there could be a bounce here, although I don't expect it. If it does bounce, I would expect actually price still to show a lot of resistance at the 61.8 here, at the 78 or 88.6 fibs. So I think those are still actually heavy resistance spots. Now, if price doesn't bounce here, but actually breaks, that could then be a bearish breakout. Now, the reason why perhaps I'm more bearish is just because this is a downtrend channel at this moment. And we also had, let's face it, a pretty strong momentum prior to that to the downside. So that's all in favor of continuation. Now, if price does get above resistance, there could be a bigger bullish break to the upside. In that case, price could be making a bigger zigzag like this, and that could be a scenario, of course, as well. And then from here onwards, it could be interesting for more longs. At this moment, though, if I zoom back to the hourly, there's, I think, a better chance of a break than a bounce. But if it does bounce, then there is some potential as well. I would like to see then price probably do something like this, hook back to that trend line. Maybe later this week, there could be some weakness in here. That could be still an interesting scenario as well for a bounce. But with a limited target, I would say at 61.8 for the moment, because there's a trend line and a strong fib and a strong level here too. So I think that could be a strong resistance spot. Now the target for downside basically at the moment is just a simple 140, probably simply aiming for the previous bottom and psychological round level. If it breaks that, there's a trend line here, just a bit lower. But otherwise, after that, we're looking at fib targets, right? Minus 272 target, minus 61.8 target are the primary ideas. Also, we have a bigger bottom here on the left, right, at 138.20. And below that, we're probably looking at weekly or monthly bottoms. In fact, here we go, monthly bottom all the way down at 134.70. So let's say 135 psychological round level as well. That would be the target for the downside. Now, before I take a look at the other three currency pairs, just wanted to let you know that there are 2 months period, April and May, where you have the opportunity to capitalize on a deposit bonus from Admiral Markets. Take a look at all the conditions. Just click on Get Your Bonus when you go to the main website, admiralmarkets.com, and you'll get all the information you need, including a very cool slider that you can check out what that bonus could be for you. Also, please be aware, we got webinars again, of course, this week. Nenet with his price action school breakouts and a weekly FX recap. And we also have a trading psychology webinar on Thursday. So hope to see you in one of these. All right, this is the euro dollar 4-hour chart, and we're looking at, of course, a strong bounce at that resistance zone. 115 was just too difficult to break. We got a lot of attempts last week and the week before, price always retesting and trying to push above it and finding support all the time, but eventually price just was not able to push through the resistance and actually broke through support, broke through that green trend line and the lines I just drew, and moved away from that zone basically with a decent momentum. So the question is now, is that break of this perhaps rising wedge that we can see a indication that we might have a reversal going on, or is this a retracement for more upside? So what I'm keeping an eye on is this channel basically to answer that question, and I'm looking at the fact that if price can break above, I would say this top here and a moving average, I think that specifically also this bottom right in here, so 113, 113.50, I think if it can break above that, make a bit of a hook back, and then bounce later on this week, this could be still an interesting spot for potential longs to the upside. All right, but I would like to see a clear break, and I'm not trading that break. I'm waiting for the pullback. Now, if that doesn't happen, and actually price kind of stays in this channel in a way, then I'm still more bearish, and I would wait for a break of that channel for a bearish breakout and a continuation. The target for the moment I would consider is, and let me just add a fib here as I go along, I would be looking for this. I would put a fib here. You can see price more or less respecting the 38.2 fib. And I would be looking for price to go any of these targets. I would actually expect price to go to 110, but obviously 111, 111.75 could be stopping points as well, and bouncing spots and retracement spots. So it depends how impulsive this downside could be. But I think 110 is a fair target, really, for any potential weakness here. If we get a bounce here, you can see already that 2 all playing in here. A lot of resistance in these levels, a bit of a head and shoulders potential right there. So if we get a bit of a bullish bounce, you got to be careful. Price, could easily turn that 113.50 for that downside to 110. So that's why I said I really want a decent break above 113.50. Really, like this, with a lot of momentum, and then kind of a bull flag pattern back to support before I might even think about going long, right? It's a risky long in any case. At this moment, due to the break of the rising wedge, due to the break of this trend line basically, and the bear flag that we see now, I think that the bearish breakout down to these targets seems the most likely, seems the most interesting as well from my point of view. Now, if magically somehow, of course, it's always possible, you got to think about alternatives. If price does manage to break above 113.50, and it does with a lot of momentum, right, and I see this bull flag happen and a continuation, well, I would be okay with looking for longs. But primarily, I'll be actually interested in this zone right in here, which is above 115, 115.25, and up to 117. That's a more interesting zone for potential upside. Downside really becomes interesting, actually, if price manages to break this support trend line. And then we're talking about actually probably roughly 110. We need to break below 110, below even 108 before we can see some bigger extended downsides. Okay, but these are the zones that I'm looking for downside on the euro dollar if price does break this little channel that we're looking at on the hourly. Moving to the dollar yen 4-hour chart, there is not much to say. I think there's been a lot of breaks here of this triangle, of this channel, of this bear flag, of this bear flag, of this bigger bottom, now of this triangle again, or rising wedge, right? And you can see that was an interesting and good trade, and there were some pips to be made to the downside. But now we're getting closer and closer to a big support level. In fact, let me redraw this template just quickly and show you which fib I'm talking about. Now, this particular swing high, swing low on the monthly chart, right, lasted for a couple of years, big uptrend. Price is now getting close to the 38.2 fib at 106.75. So from that point of view, or perhaps a bit different if you draw it from here, 1 second. There we go. Okay, 106.50, right? So price is getting close to a strong fib. So I'm still interested in shorts, but not if it gets right at 106.50. Then I actually expect roughly in that zone a bullish bounce. So from that point of view, if we then go back to the 4-hour chart, you can see that price is pretty close to that 106.50, right? So if it breaks this bottom, this was of course a great trade to the downside, a great correction after good momentum. But if it breaks this this double bottom here, there is some interesting shorts potential there below this level. Let me take a look, 107.60. But it's really a small zone before we hit a big monthly fib at 106.50. So that's something I would be careful of when shorting the break of that bottom, and I would be looking for small pullbacks on smaller time frames, by the way. Regarding the Aussie, last but not least, we did get the bounce off the 38.2 fib as discussed in last week's video. We also got the break of the resistance trend line as also discussed. What didn't happen is price did not go up to the target as yet, the minus 272 target. There was some weakness here, price kind of stalling and not able to push through. I'm now getting into a spot that I'm a bit careful with the Aussie. There's a lot of divergence. It's a awkwardly corrective angle that doesn't show much thrust or momentum. So I'm going to be cautious with the Aussie. I think that there's potential for a reversal, maybe back down to the bottom of this channel, which could easily be again a bouncing spot. So I don't see a lot of interesting setups for this week for myself. Perhaps if it does break above resistance, the dash up to the minus 272 target, or if it does bounce basically at the bottom of the trend channel, could be things that I will keep an eye on throughout the week. Alright, thanks for joining this video, of course, and hope to see you in the webinars. Take a look at admiralmarkets.com for the bonus and, of course, the content, the analysis that is being delivered on a daily basis. Thanks again. Talk to you soon.